On Business Incorporated today. Zambia begins rationing of electricity supply to mining firms. Ghana's revised e-levy begins today. And Egypt set to begin Africa's first green tower. Good afternoon. Welcome to the midweek edition of Business Incorporated here on Channels Television. I'm Ini John McQuarrie. Let's delve right into the program with market numbers starting with Nigeria. Glad to say that the NGX has recovered, at least it recovered at intraday, and hope it stays that way. But it is mostly positive sentiment for African market. Let's look at the numbers now for the NGX in Nigeria, about 0.5% in the green, 0.48% at 51,691.06, and in South Africa, much better than that, more than 1%, 1.09 to be precise, 78,000 plus. And then we look at other regions. Egypt's doing very, very good. They're 2.20% in the green, and then Kenya, unfortunately, is in the red, but that was for yesterday, close yesterday's trading almost 1% in the red. Let's move over to the Middle East now, where it's mixed sentiment at the close of trade or at intraday over there. Let's see the numbers, and the numbers there in red for Abu Dhabi, 0.67% at 10,141.24. Dubai also following suit, almost 0.5% at 0.48% at 11,274.74. And then we look at Saudi Arabia. That's the only green for that region, 0.08% at 10,642.93. Qatar, deep in the red, 1.32% at intraday for Qatar there. Well, let's move over to Berlin now, where there's trouble brewing from there. Protesters and police have clashed in an abandoned village in Germany, where work to expand a coal mine is due to begin in the coming days. Thank God we have our eyes and ears through Rob Watts this afternoon. Hi, Rob. Good afternoon. Well, this abandoned village has been the scene of clashes between the police and protesters. What's at the core of this clash?
Well, this is part of a long-running dispute over the planned expansion of an open-cast coal mine in Germany's industrial heartland. It's easy to see why environmentalists are against it. The Garzweiler mine isn't just any coal mine, it's a lignite mine, a so-called brown coal mine, which produces a particularly pollutant form of coal. So the village of Lützerath was abandoned so that the mine could be extended, and this week it has witnessed dramatic scenes as police have struggled to clear the area of demonstrators ahead of the commencement of the expansion, which I can tell you has begun this morning. Protesters formed human chains, they staged sit-in protests and occupied derelict buildings in the village, drawing attention to a subject here that is particularly sensitive right now. Germany is, of course, in the grips of an energy crisis as a result of the war in Ukraine. It has already increased its coal burning to make up for that. And now Berlin finds itself doing some soul searching about whether or not coal should be playing any part at all in its future plans.
Yeah, well, obviously Germany is in the middle of, I think, the devil and the blue sea. The blue sea, that's what they say, because you have that energy crisis. You also have them planning to reduce their carbon footprints.
Well, the government here, a coalition, including the environmentalist Green Party, has promised to bring forward the country's coal phase out to 2030. But in the meantime, it insists that it does still need the coal, particularly in light of the fact that Germany is no longer getting natural gas from Russia to burn instead. RWE, which owns the mine, also claims that that's the case, although it wouldn't it? It owns several lignite mines in Germany, but in the company's defense, it also says it's investing heavily in energy transition technologies. However, environmentalists say it's not sufficient to simply say that Germany needs the brown coal. The country produced a record amount of renewable energy last year, and that generation is only increasing. It also exported more energy than it imported during 2022, despite the energy crisis. And it's that quandary over whether or not this is necessary that is at the heart of the controversy surrounding the happenings at Lutzerat, just as the heavy machinery does begin to tear that village down.
All right, so let's leave the energy crisis just for a minute and see what's happening in the market. How's that looking?
Well, it's earnings season this week with a flood of company results coming in on Wednesday. Retailers are going to give us an idea of just how their Christmas went this time round, particularly it's expected not to have been as bad as some had feared, but investors will also have the words of the World Bank ringing in their ears. The organisation has just said that the global economy is perilously close to a recession. It's just downgraded its global growth forecast for this year from 3% to just 1.7%. And the war in Ukraine, energy supply problems, and a dragging impact of the coronavirus pandemic are all expected to contribute to that and to lead the world economy to its slowest growth since the early 1990s. We also heard from the US Federal Reserve Chairman Jerome Powell late on Tuesday. He didn't throw any real light, though, on what the Federal Reserve is planning in terms of monetary policy, something that has been having a big impact on European stock markets in recent months. But investors will now be looking for clues as to what's going to be happening in the US when inflation data comes out tomorrow.
Wait for that data is worldwide, global, I guess, and holding our breath for that. Thank you so much, Rob Watts. All right, so let's move on now to Asia, where shares traded mostly higher as investors looked ahead to that consumer price index we just talked about with Rob, which would set the Federal Reserve's trajectory in its attempts to tackle inflation after raising rates 7 times last year, 2022. Australia's S&P AX 200 rose 0.90% to close at 7,195.5.3, and its consumer price index rose 7.3% year-on-year in November, a sign that inflation pressures are yet to slow. The Nikkei 225 traded 1.03% higher to end off at 26,446, and the Topix inched up more than 1% to 1,901.25. The Kospi edged up 0.35% to 2,359.53, even as South Korea's unemployment rate for December rose 3.3% compared to November's 2.9%, marking the highest in 11 months. The Nasdaq climbed 1.97% to close at 709.77. Hong Kong's Hang Seng Index rose 0.51% in its final hour of trade, and mainland China's Shanghai Composite shed 0.24%, closing at 3,161.84, while the Shenzhen Component dipped 0.58% to close at 11,439.44. The MCSI's Broadex Index of Asia-Pacific shares outside Japan rose 0.41%. And the Wall Street now, stock futures rose on Wednesday as Wall Street looked to build on what has been a positive start of the year so far. Futures tied to the Dow Jones Industrial Average ticked up 76. Now let's look at the specifics of that number now. A green chart we have generally now. Dow Jones up 0.16% and at 33,899. S&P futures also in the green, same percentage. And then NASDAQ, the tech-heavy NASDAQ, up not as much as the others at 0.07%. 11,290.25. There is what we have for, and then all of this comes as the Nasdaq Composite rose, and all looking forward to that consumer price index that we're waiting for tomorrow from the United States, and of course we'll see the market move one way or the other at the release of that. Still staying in the markets now, oil prices were broadly steady on Wednesday as market participants were pulled in different directions by an unexpected build in the United States crude and fuel inventories, a global economic uncertainty, and China's reopening of its economy. Moving in and out of negative territory, Brent crude futures were up 31 cents at $80.41 a barrel. U.S. West Texas Intermediate crude futures rose also 12 cents to $75.24 a barrel. Both contracts rose on Monday and Tuesday, rebounding from a sharp sell-off in the first week of 2023. Prices have not jumped but gained some support from hopes for fuel demand growth in China, which is the world's second largest oil consumer after the United States, after it eased its COVID-19 curbs and increased crude import quotas by 20%. Commodities now. Gold prices extended gains to a fourth session on Wednesday as expectations of slower U.S. rate hikes lowered Treasury yields, while lifting bullion to a fresh 8-month peak. Spot gold rose 0.4% to $1,884.98 per ounce, is the highest level since early May. U.S. gold futures added 0.7% to $1,889.10, making gold less expensive for overseas buyers. The dollar index slipped 0.1%, while benchmark U.S. 10-year Treasury yields fell below the 4% mark. Gold bulls are very much in the driving seat, and if December inflation does indeed cool and increase the expectations of low rates, then we should see the dollar off and by extension gold higher. This is the opinion of traders. The metal has recovered more than $270 from September lows on expectation that the Fed would slow the pace of its rate hike. But the risk is that if CPI surprises to the upside, it could push gold prices back down. These are some of the fears that traders are facing in the market at this time. Let's see what's happening with currency now as Ethiopia battles the economic consequences of the coronavirus and the war in Tigray region. Speculation abounds that the country will require a bailout from the International Monetary Fund to avert a sovereign debt default. The country's central bank, the National Bank of Ethiopia, is battling a severe shortage of foreign exchange reserves that hurts efforts to service the dollar-denominated debt. Meanwhile, the World Bank Group in December had stated that the current situation in Ethiopia will continue and will be monitored on the grounds across the entire country, and they will sincerely hope for stability and the permanent cessation of hostilities in order to facilitate accelerated, inclusive development. Let's take a short break now. When we come back, we'll stay in Africa. We have one conversation, and a lot of stories for you. It's here in Business Incorporated on Channels Television. Welcome back. Still watching Business Incorporated here on Channels Television. The World Bank has approved significant funding to revive agriculture in Uganda. Productivity has stagnated over the years and tangibly affected general standard of living. Food security is a threat there. Meanwhile, China has moved to fast-track agriculture production in Uganda. Wonder why Uganda is getting all this agricultural attention. Well, we have Frederick Mugira. He's the co-founder of InfoNow, joining us from Kampala. Now, good afternoon, Frederick. Thank you so much for joining us. How bad is the situation really? You know, when we see the World Bank interested in agriculture in Uganda, and then we see China, and apart from those other domestic efforts, how bad is the situation in the sector?
Well, thank you so much. Like you called, my name is Frederick Mujera. I wouldn't say the situation is so bad. We have had so many challenges, not like we have right now. And there are other factors that you would say cause this situation. But I just want to take you back and let you know that agriculture is the backbone, Uganda is the backbone of Uganda's economy. You have over 70% of Ugandan workforce employed in agriculture. And Uganda's potential for agriculture is among the best in Africa because of the low temperature, fertile soils, the rainy seasons. But we have had so many challenges that affect the production and the output from the agriculture sector. And one of them is climate change. And yeah, so you find that in areas where the support is going to, like in Karamoja, we have had changes in planting season, farmers need to go to plant, and then they need support. And but also there are other areas that would need support that you money for example, from World Bank and China is going to, like irrigation, like development of the quality of the packaging capabilities, the seeds and all that, and road network to promote agriculture. But right now, you will not find the challenge of food in most homes. There are so many uh, homes in Uganda depend on agriculture, and you don't find challenges, especially except in areas like Karamoja, where they were affected by the dry season. Yeah.
All right. So, you talked about households. Now, I'm just wondering. A lot of times we get a lot of news how the World Bank is intervening, the IMF, the Food and Agriculture Organization. In Uganda, how close is this to the people? How much impact does it get? Do the people, the households, individuals, Ugandans, how much impact does it really have? Now we have China, we have World Bank. Do they really feel the impact, or does it end with the news?
Yeah, you feel the impact. I will give an example. For it. Yesterday, I bought rice, and it was packaged in a paper written on the brand name and other stuff written on in Chinese, stuff that I wouldn't know. But this is rice that was produced in Uganda, grown in Uganda, and packaged in Uganda. This is one of the examples that you can look at as what Ugandan farmers get as support from China or from other funders. I know because I've covered widely about the China-Africa relationship, and I know there are so many Ugandans who are taken to China, Ugandan agriculture experts who are taken to China to gain knowledge and come back to Uganda and train Africa and train Ugandans on how to modernize agriculture. And the same has happened. Chinese experts who come to Uganda and train. I will tell you an example of so many projects that have been started under the South Operation Project supported by FAO. That China is giving funds to Uganda to start, for example, agricultural production, institutions to fund livestock improvement, fund rice growing. China has been funding rice growing in Uganda way back from 1973 when they started, funding rice growing projects. And rice growing, for example, was not common in Uganda. But when we have so many, people who come in to grow and sell rice in Uganda, you find that prices are cheap now for the rice. Of course, there are several other challenges that would affect, the quality, which would be make it hard, sell international level. But generally, you find that these projects that are supported by the World Bank, by the China, trickle down to the ground through different projects. For example, I'll tell you, government now is implementing the parish development model, where funds go directly to the parish, to the parish development committees, to give out to individuals on the ground through circles. And then these funds are paid back with 6% interest at the end of the year. This is how funds trickle down. And these funds, for example, in Uganda, are meant to go to the production, storage, processing, marketing of agricultural products. This is how funds trickle down level to the grassroots levels. But there are other challenges, for example. Because of the ignorance, this money can be swindled by the people who are meant to, give it out to the beneficiaries.
All right. Well, we know that there'll always be the flip side, but it's interesting that you noted there that it's actually, you are part of the beneficiaries. You actually see the bag of rice, from this aid from China. Very interesting and a good one there. Thank you so much for these updates, Frederick.
You're welcome. Thank you.
Okay, so let's move over to Egypt now, where Telecom Egypt, the first integrated operator of communications and information technology services in that country, in cooperation with Hawaii Technologies, has announced the implementation of the first eco-friendly integrated solution to provide mobile networks via utilizing tower made of fiber-reinforced polymer with wireless availability. Through this cooperation, Telecom Egypt will become the first operator in Egypt and Africa to install a green tower which will serve as an optimum steel alternative. The tower is approximately 18 meters high with a special camouflage fence made of environmentally friendly material supported by integrated wireless access solutions and a green solar energy system. Congratulations to Egypt. Hope other countries will follow suit. In Ghana, the Mobile Money Agents Association of Ghana has expressed the hope that the revised rate of electronic levy, the e-levy of 1%, which takes off today, will help revive its business since operations suffered last year when the levy was introduced. It said with money transfer businesses having suffered with the rate pegged at 1.5% last year, the reduction of the rate, as the association has called for in the past, would help increase transaction volumes. Despite calls for Ministry of Finance to reconsider the rate of 1.5%, that was maintained, but it did not yield the expected revenue as transaction volumes reduced. The government had hoped to rake in about 6.9 billion cedis from the collection of the levy on mobile money and other electronic transactions, but the figure was revised downwards to about 4.9 billion cedis following the delay in the passage of the e-levy. We're still in Ghana now. The consumer inflation rose to 54.1% year on year in December, and that's up from 50.3% the previous month. That's the highest level in 22 years. And it was mostly driven by fuel, utilities, and food prices. The West African gold, oil, and cocoa producer is battling its worst economic crisis in a generation. Its CD currency slumped last year, fueling inflation as government spending cuts and central bank interest rate hikes failed to tame prices. December inflation reading is the highest since April 2001. Well, let's move over to Zambia now. The country has started rationing electricity supply to mining firms following reduced power generation after a big drop in water levels in Lake Kariba. Water levels in the lake were down 1.66% of usable storage on Monday for the Kariba North Bank Power Station in Zambia and the Kariba South Bank Power Station on the Zimbabwean side of the lake. And because of this, we see that last week, ZESCO doubled the number of hours it cut supply to domestic customers to 12 hours from 6 hours daily, as low water levels in the lake threaten power generation. That's it on the program today. We'll do another one tomorrow. To stay with us, I'm Ini John Mekwa. This is Channel Television. Stay with us.